Al, as we continue this discussion about, I guess, the retail trader and the institutional trader, which would
Mhm.
be the big banks, the smart money we call it, there's a big disconnect there. And partially, I believe that is because you alluded to the terms buying right and
Right.
selling right. The public is doing things backwards usually,
Mhm.
and the institutions know that. So let's talk a little bit more about that buying right and selling right. What you really mean by that?
Yeah, in any trade or any investment, there's two groups that participate, and one is typically the pros, the smart money, and the other are the retail traders, the amateurs, the novices. So your mindset is either that you are trading, acting, or you're acting, executing like a pro, or you're thinking, acting, and executing like an amateur. And most people are thinking, acting, executing like an amateur, not a pro. And the probably part of the problem there is that they're just not taught how to do it properly. But when we talk about buy right and sell right, that buying high or buying low and selling high doesn't mean you have to have bought at the lowest price something ever was at or sell at the highest price it will ever be. It's just buying at a point on you're identifying actually on a price chart where the odds are in your favor that your investment is going to increase in value. That's buying right. Selling right is where the odds are in your favor that the price is going to reverse. But in both cases, you want to make sure you do this where you have the potential for a large enough profit. We want to do high reward, low risk trades. And the high reward trades typically start at the beginning of a movement. People always or may have
Or
heard the
turns in
term.
price, right?
Sure, where it turns in price. And what we find is that that's where the highest quality trades always happen at or near that turn in price. That's where the lowest risk entry happens to be or exit. But it also is where you have the highest potential for profit and then also the highest odds of that trade working in your favor. And those are the things that you really want to have associated with every trade or investment that you do. But the key to really taking advantage of the proper price is being able to identify it actually before it happens. So what
Mhm.
we're looking for are not orders that have already been filled because then a good part of the move has already taken place. You mentioned earlier, I think in that first segment, what most people do is they will, and they've been taught to do this, look at the books of a company, look at the balance sheet, find out as much as you can about a company,
Research.
do the research, which typically ends up in analysis paralysis. But by the time you do that, by the way, that information you have is all public knowledge and it's knowledge that the institutions have before we get it in most cases. So they've already made their entries, their exits. They've already taken their position, and a good part of the potential move has already taken place.
I'm
So
glad, okay, I'm glad you brought that up, that research thing. I mean, I have fish, right? And I was trying to research on different things on what you're supposed to do with fish, how koi fish, how do you take care of them in the wintertime? And I realized I was doing so much research, I didn't even know what I was looking for.
sure.
So I had to find an expert to help me through that process.
Mhm. Yeah, there's so much research out there, so much knowledge, and so many different strategies that people push in the financial markets that same thing happens. It becomes so complicated that you just end up throwing your arms up and go, I don't know what to do now. There's so much out there. I don't know what to choose, when to use one strategy, when to use another. That's why it's so nice to have guidance and have somebody help you. First of all, understand how the markets function and how these different assets and different strategies can be utilized to take advantage of what's happening in the market. Remember, you cannot control what happens out there. You can't control what happens in the economy. You can't control what happens in the market. What you can control is how you react to those different things. And that's the important thing, knowing how to react properly at the right time and knowing why you're doing it. That's all part of that mindset. That's what the pros do. They understand what they're doing. And we don't have to go through all that research because they've already done it. All we need to do is just follow what they're doing, and they are giving us that information. They're actually telegraphing to us what they're doing, and we show the people that come into these classes. We show them how we do that, how we identify the activity of the institutions before it actually happens.
Yeah, I do believe that mindset is probably one of the number one things as a trader and investor. I mean, and the great thing too is Al was talking about the difference between a pro and a novice. I mean, you don't have to be a pro or a professional to trade in the markets. You want to trade like them.
Sure.
And that's one of the cool things about Online Trading Academy. Our sponsors, they teach a strategy that's designed to teach you to make better investing decisions, which helps you find turns in price, which is designed to help you find and teach you to find turns in price on a price chart. When you think about it this way, I used to do a lot. I used to be in construction,
Mhm.
and I would have to read blueprints. I would have to read a blueprint to see, okay, what do I need to do to make my decisions? I did earthwork. So I was building roads, I was building ponds and everything. And I had to see, okay, what do I need to do based off this blueprint? And then how do I execute that with a machine, right?
Mhm. Mhm.
Now, that's the same thing in trading and investing. You get your information from, you call it a blueprint, but essentially a price chart. That's telling you what's happening and then what you potentially may need to do to make a better investment decisions. And you really, I guess, in these investing classes that you were talking about, you talk a lot about how that happens, the how it functions, how supply and demand really works on a chart. You were talking about the unfilled orders. You mentioned having the right mindset and making proper decisions with different assets
Sure.
and different techniques and strategies, right? Talk about those other assets because people know the stock market. That's all they're talking about. And that's all the chatter that's happening out there. What are those other markets and why are we seeing so many people jump into those?
Well, yeah, let me answer that question first. The reason that we're seeing so many people jump into those is that a lot of people are looking more at generating more short-term cash. There's really two different ways of approaching the markets. You have kind of your accumulation, the income phase, and then you have that distribution, the wealth, the retirement phase. And the way that you approach those is different. For short-term income, you need to be able to access something on a short-term basis, which is exactly what that says short-term income. And there are different assets that are more beneficial for doing that. If you're looking for some additional money, maybe on a weekly basis or monthly basis, you can't put something together that is intended to be held for 10 or 20 or 30 years.
You basically need a strategy that's designed to do that for now, to teach you to do
For
that.
for now, right. And one of the problems and one of the reasons that Wall Street doesn't put many of their clients into assets like that, a couple of reasons. Number one, it's too much work. If you have 3 or 400 clients or 200 clients and you have to be managing something that has a short-term lifespan, say that you get into it and out of it maybe on the same day or maybe a couple of days later. Well, they just don't have the time to do that. And to be honest with you, the other assets that we're talking about, other than stock, like futures, forex, and options, the money isn't there. The cost of doing that is just not beneficial to the companies. It's more beneficial for them, to be honest with you, to put you in a mutual fund or some kind of a structured portfolio where they really don't have to do much work, but they're collecting an ongoing fee.
That I think that makes people feel comfortable as they say, "Oh, we're going to be in a structured portfolio. We're going to
Sure.
sell you some mutual funds, which are fantastic." Well, the fact of the matter is that's for them. That's for them to collect fees. It's. I mean, if you're listening right now, do you agree or disagree? Do we have a retirement crisis?
Sure.
People can't retire. So what is the disconnect there, right? So that's why people are looking into these other assets.
Right. In the institutions, the pros, again, we get back to that mindset, think, act, and execute like the pros. And by the pros, we're talking about the big brokerage firms, the big investment firms, big hedge fund managers, people like Warren Buffett. Those are the pros. That's the smart money out there. If they're using these other assets, isn't there a reason that they're doing that? I mean, they're not going to be utilizing their money in a way that they don't get the greatest benefit out of it. And one of the reasons for using the options market, the forex market, the futures market is not just that they can be used for short-term trading, but also because they have leverage. So every dollar that is invested really controls a multiple of that dollar as far as the total investment that they're investing in. It's sort of like having a down payment. You put a small amount of money or have a small amount of money in a margin account that just covers the ability for you to actually control a much larger investment. And some of these assets like futures and forex trade 24 hours a day. So you have many more opportunities from a time standpoint for you to participate. You can participate globally, but that combined with the leverage that they have makes these very attractive assets to trade.
I'm glad you brought that up, that 24-hour market. I mean, most people think the stock market's the only thing that's available. Well, they have been reluctant to get in the market because if you work during the day, it's kind of tough. These other markets, the market, the forex market, are phenomenal in the evening. They're open, right? So
Right.
that's another opportunity. And Al was talking about. I just want to confirm a little, or just kind of unpack a little bit about why the smart money is using these assets to create short term income. Now, when we talk about short term, that doesn't mean day trading. That
Yeah,
just,
no,
that
no.
just means if they are using that to generate capital, right?
Mhm.
And that could be on any sort of time frame, and that's why they do that, right? So there's any style of trading and investing, and Al, when you teach these investing classes, you really talk about those different styles.
Great.
What's available? What style of a trader or investor do people want to be? And that's where people can really, I guess, see what's available for them, what they can do, what they
Mhm.
can't do, and just, I guess, the opportunities that are actually out there that they're really missing out on. Al, coming up next, I want to continue this discussion about these other asset classes like futures, forex, and options, and why so many people are kind of going into those in their retirement accounts.
Mhm.
There may be more opportunities with these other assets to use the leverage, right?
Correct.
So coming up next, leverage and then within retirement accounts. This is Josh and Al, investing with confidence. We'll be right back.